Thanks to ICSI IIP for giving this opportunity to interact with all of you on a very interesting subject of implementation of resolution plan. While this has been almost 7 years since the inception of Insolvency and Bankruptcy Code, this part of IBC code regarding implementation has always been evolving and exciting and compels you to reinvent with regard to the drafting and preparation of resolution plan. While we will run through the deliberations today, we'll know what are the do's and don'ts while the resolution plan is conceptualized, prepared essentially. Of course, we will deal with the subject with more precision as to how the implementation of resolution plan has to be done. So in this regard, I had kept a very short and crisp agenda. We'll start with some introduction part as to, although it is some part of it may be a repetition also, but to set the tone for coming to the resolution plan implementation, I think some 5-10 minutes discussion on the background is also required. We'll run through what are the timelines and then we'll come to the resolution plan and its implementation. And the most interesting part is the corporate actions which are arising out of the resolution plan. That's where the interest of the subject lies. Then how to do with the compliances, filing of forms. Then what is the compliance framework under the security law? Different. Is there any relaxation under ICDR, LODR, SEBI, SAST regulation, delisting regulation, and securities contract regulation? And there are certain red flags which we wanted to flag before the regulator also. So with this, why Insolvency and Bankruptcy Code was required? I think this is not something hidden as of now. Everybody understands that India was grappling with primarily 3 challenges. And the challenges were surrounding the multiplicity of law, multiplicity of jurisdiction, multiplicity of forums, and everything, all the problems that we can think around the stressed asset was primarily surrounding these areas only, because of primarily these challenges that the country was having. We were having SICA, we were having RDDB, we were having CIRP, we were having normal civil law, and many state laws were also dealing with the subject. So when a lender or a financial creditor was making an attempt to resolve the stress, the ecosystem was posing certain challenges, and either the process was getting delayed or was process getting failed because of these challenges. So we conceptualized the law, which was comprehensive in a code format like your civil procedure code and criminal procedure code, which provides single solution at a one roof. Now you are aware, adjudicating authority is the sole authority to deal with the subject of insolvency. So the multiplicity of law was removed, the multiplicity of jurisdiction was removed, and multiplicity of forums was removed. Second big thing that this law did, it provided a time frame. That everything has to be done in a time-bound process so that it can succeed. It cannot go endlessly and it cannot be allowed to be continued endlessly. This served in twofold. One, the entities which were having a potential to get resolved, those were getting resolved in a faster manner, and the creditors were able to get their legitimate dues settled. Secondly, it also provided an opportunity to maximize the liquidation value. You are aware that as far we are going from the date of closure or NPA, the value keeps on diminishing because we are not doing any value addition to the entity. Most of the time, the operations are also closed. And the problem keeps on aggravating over a period of time, and the stage comes when your 100 rupee value comes to 1 rupee, and at that point of time, you decide to liquidate. Whereas if you would have decided at appropriate time, maybe if not 100, you would have been able to realize some 50, 60%, 70% of value. So the early detection also is one of the objective, and it provided a common platform where checks and balances had been introduced. Somebody can say there was a joint lenders forum in the earlier regime also, which was framed by the Reserve Bank of India. But please appreciate, that was a guideline coming from the Reserve Bank of India. There was no body kind of thing where the committee of creditor kind of structure was prevailing. If you compare, committee of creditor is chaired by an independent professional, which is me and you, who is well versed with the provisions of law of insolvency, is in a position to steer the organization in a lawful manner, but he is not given any voting right. Voting right is vested with the creditors, who are the larger partner in the project. As soon as the project goes into insolvency, the steering command is given to the financial creditor, and they are on the driving seat and they take necessary decision. And last but not the least, this was an attempt to consolidate and avoid the multiplicity. If you go in a background is BLRC, and the paradigm shift was debtor in control to a creditor in control model. Rest all the things are same as were there in the previous regime. If I can give you 6 principles what I had learned as a philosophy of insolvency and bankruptcy code, and we have to apply these 6 fundamentals whenever we are in doubt, whenever we are interpreting whether it is a resolution plan or it is implementation of resolution plan, that it is a consolidated law, providing a time-bound process. Objective is maximization of value of assets, promotion of entrepreneurship and making credit available to the society by balancing the interest of all is the sole objective. So if these 6 fundamental are borne in mind while doing any interpretation of any provision of law, I think we'll be sorted. We'll not have any confusion. Certain unique feature, if I can talk about, it is not only the corporate debtor who is under obligation to perform, or the IRP is not the only person who has to take action. The inertia has shifted, and the inertia has came now to the lenders also, who are the financial creditors, to take appropriate decision at appropriate point of time, whether to initiate CIRP, after initiation, whether to accept and approve the resolution plan, or let the company go into liquidation. So they are taking a conscious call at one point of time that if they don't resolve, the value what they are likely to get today may also deplete, and the value may even be reduced. This is first fundamental shift. Secondly, the jurisdiction of all remaining courts, civil courts, have been barred. No civil court has a jurisdiction with regard to the insolvency and bankruptcy court matter. Thirdly, the non-obstante clause of section 238 of IB code, which provides the provision of this code, shall have overriding effect, notwithstanding anything contained in any other law for the time being in force. So these are the three tools, three things which are very fundamental and which make this law very unique. And the intent of the government has been very, very candid and very clear. That is obviously evidenced by the speed by which the law was legislated and has evolved in the last 7 years of time. May 2014, the concept was introduced, and in 2 years' time, the law was implemented in the May 2016. And on the ground, on 1st of December 2016, with Insolvency and Bankruptcy Board of India and NCLT being rolled out, was completed. SICA was repealed by ordinance, and very quickly, in less than 6 months' time, even the fast-track insolvency process, and in 3 years' time, personal guarantor to corporate debtor process, and couple of years later, the PPIRP process, and several other evolutions had taken place that we are all aware. And this is the ecosystem where we know IBBI is there, IPAs are there, insolvency professional, IPE are there, information utility is there, and registered valuer, and adjudicating authority and appellate authority is there. Framework is very neat and clean, where the law is divided into 5 parts. Each part is complete in itself. If you have to deal with the corporate insolvency, you go to part 2. If you have to deal with individual insolvency, go to part 3. And if you have to deal with authorities and general provision, go to part 1 or part 4. And the miscellaneous provisions are contained in part 5. And beauty is that each part is also further divided into some 8-9 chapters, each chapter dealing with one respective subject. So if you have to go with one particular, let's say, resolution, CIRP, you go to chapter 2, you will get all your material related there too in the particular chapter, and you will be easy to navigate the understanding about the law. So is the rules and regulations. Each chapter, each related subject will have one specific regulation framed by IBBI, correspondingly, there is a rule framed by the Ministry of Corporate Affairs also on the respective subject. And that's how the ecosystem has been built around. Adjudicating authority for the purpose of corporate is a National Company Law Tribunal, and for non-corporate, it is Debt Recovery Tribunal, with one exception of a personal guarantor to corporate debtor cases where the matter is pending before adjudicating authority. The same adjudicating authority has been decided to be the adjudicating authority for PG to CD cases also. Appeal goes to National Company Law Appellate Tribunal, and DRT appeal goes to DRT Debt Recovery Appellate Tribunal, and further appeal from both of these appellate tribunal goes to Supreme Court. So this is a very clean. No other court has got the power in this regard. Now this is very interesting because we are going to deal with the resolution plan, but though it is more relevant from the liquidation perspective, but there are certain aspects which a resolution plan is required to fulfill to make it compliant to the provisions of IB code. So that's why it is important, and when we are discussing about the implementation, it is very relevant to understand the waterfall mechanism also. So section 53 provides that in liquidation process, the distribution of proceeds shall be done in this following manner. Obviously, in case of resolution plan, there is no concept of distribution, though there may be certain payments as per the claims received. There may be certain settlements, but those settlements are not literally required to be followed as per section 53, except to the extent provided in the law with regard to certain class of creditor like operational creditor and certain other provisions which have been encapsulated. So it is relevant that we understand. It is called waterfall because it is presumed that it is similar to you sitting on the top of the hill, which has got some 8 holes, and you assume and imagine that you are dropping water from the top of the hill. The water has a tendency to go and fill the first hole first, and then if water remains, it will go to the next hole, and then similarly to the next hole, and last hole will get the water only once the previous holes are completely filled. Now you replace these holes with the cost center. CIRP cost, liquidation cost is 1 hole. Workman and secured creditor is the second hole. Employee dues being third hole. Unsecured financial creditor being fourth hole. And government dues being the next hole. And other debts. And then comes the preference shareholder, and then comes the equity shareholder. So whatever money you have realized in the liquidation process will be distributed with this philosophy of waterfall only. If your money is sufficient just to meet the CIRP and liquidation cost, no other creditor will be entitled to receive anything. If your money is sufficient only to meet up to the workman and secured creditor, workman for the last 24 months and secured creditor who have relinquished their security, that hole will be filled. Employee dues for 12 months will get if something further left out. Similarly, unsecured financial creditor will only get if the surplus money is remaining, and so on and so forth. If we quickly see what is the typical timeline prescribed by the IB code, the CIRP commences with the admission order by the adjudicating authority, and insolvency professional who is an interim resolution professional has to make a publication in the newspaper within 3 days of time. 14 days time is given for submission of claim, and last day being 90 days from the CIRP commencement. Verification has to be done within 21 days, and if there is an authorized representative appointment requirement, that has to be done in another 2 days time, and report is required to be submitted in another 2 days time. First committee of creditor meeting takes place within 30 days from the commencement of CIRP. If a interim resolution professional has to be either confirmed as a resolution professional or some suitable replacement has to be done, that also has to be completed within 30 days of time. Matter goes to adjudicating authority for seeking approval, and until the appointment of RP, the IRP has to perform the functions as if he is a RP. Valuer is appointed within 47 days, and parallelly, if there is a withdrawal received, then within 7 days it has to be disposed of by committee of creditor, and RP has to file with adjudicating authority within 10 days. Now, parallelly, one more process runs, which is an avoidance transaction. And in the implementation of resolution plan also, it has a bearing. Within 75 days, the IRP or RP is obligated to form an opinion whether avoidance transactions are in existence or not. Now, he gets another 40 days time to determine whether avoidance transactions are in existence. So what is the difference between the opinion? Opinion is a red flag. Basis red flag, he is forming opinion. Now he needs some evidences, maybe a report of transaction auditor, maybe collecting evidences so that he can corroborate a case and file an application. An application has to be filed within next 20 days. So the 135 days timeline is provided for filing the application to adjudicating authority. And if you see this 135 days timeline, it coincides with the 180 days timeline for filing of resolution plan with the adjudicating authority. So with that sync, this kind of timeline has been given. Parallelly, IRP also keeps the exercise of inviting a resolution plan. He prepares an information memorandum within 54 days. He publishes Form G within 75 days of time. And submission of EOI is to be required to be made within next 15 days of time. And in 10 days of time, he releases the provisional list. 5 days, the public has a time to make objections to the provisional list, and final list is released within next 10 days. RFRP evaluation matrix information memorandum is parallelly released on 105th day, within 105th day, and resolution plan is also received within 135 days. So if you see, previous timeline was also 135 days. This timeline is also 135 days. So it has been beautifully balanced so that process is not getting disturbed. Submission of resolution plan with the adjudicating authority has to be done within 165 days, and adjudicating authority approves the resolution plan within 180 days. Now, very limited grounds have been prescribed in the law for filing the appeal against the order of adjudicating authority within 30 plus 15 days of time. And these grounds are that the plan that has been received is in contravention of law. That means plan has not taken care of compliance of any particular law. Maybe it is a stamp law. Maybe it is a FEMA. maybe it is Companies Act or any other allied law, maybe competition law, or there are material irregularities by RP during the CIRP process, or the debt which is owed by operational creditor has not been dealt in the manner that has been prescribed in the IB code. And last, the plant does not pay a CIRP cost as per the insolvency and bankruptcy code. So if these are the conditions, then you will be in a position to file a appeal before the appellate authority for challenging the resolution plan. Otherwise, there is no scope, commercial wisdom. There are plethora of judgment of apex court which have now settled that on the other grounds where the commercial wisdom of the financial creditor or the committee of creditor has been given the supremacy, and adjudicating authority literally has got no say, no intervention with regard to the same. Now let us spend some time on a resolution plan, which is subject matter of discussion for today. By this 15-20 minute of brief discussion, giving you a background, I'm sure it was known to most of us being an insolvency professional, but I think this was necessary to facilitate the discussion what we are going to do now. So base has been set, and we will discuss the nuances for resolution plan and its implementation. What is resolution?
May I ask a doubt here?
Yeah, please.
With regard to the timeline, if you may go back to the timeline slide, I think IM preparation now it has been allowed to submit, I think, the 95th day.
Correct. Correct. You are right.
Instead of T54, I think it's now.
This is a little old presentation.
Yeah. Yes, sir.
I agree that that timeline has been updated.
Yes, sir. And also with regard to the regulation, slide 20, if you may go back.
20.
Yeah, waterfall mechanism, sir.
Acha, waterfall. Okay.
I think it was 20 only.
20
yeah,
model 10.
Yeah, 19, sorry. 19.
Yeah.
Yeah, here I just want to ask you a doubt, sir. Basically, with regard to the government dues, with regard to the observation in rainbow papers, now what is your feelings, sir? Because now government also has been considered as a secured creditor by virtue of the contract or something in between the company and
if you ask personally my view is that rainbow paper was to be considered and has to be interpreted in the context in which the judgment has been passed, right? I don't know how it will further evolve, right? As of now, it is a law of the land. But if you see the other matters also subsequent to the same, it is not blindly followed in all the cases, right? So what I understand, the context in which the matrix of rainbow paper was decided, it was little different. Maybe there may be a divergent views on the same, but I believe somewhere treating the government dues because of that condition as a secured, to my view, is not correct. Now, because it is jeopardizing the interest of the other creditor, and let us wait and watch because Apex Court also has reviewed and revised their judgments over a period of time. If there are a couple of instances, I don't know at what point of time it will happen, but certainly it does not look optics wise correct to me to classify them in that particular class. But till the time that process happens, I think we have to honor the verdict of Apex Court. That's the way I am looking at it. But honestly, the way the construct is, somebody can, for argument's sake, can argue either way. but I don't think that is a way
Objective.
the law has to be interpreted. Now, I'm little unsure about the interpretation that has been taken, unfortunately, in this particular matter. We respect the decision of the apex court, but I have a slight different, and particularly I feel if I go, this is not the time when we can discuss in detail of the judgment of where what Supreme Court has considered and why they have considered, but at some other appropriate time or at private discussion, we will certainly like to discuss as to what were the merits, why court has considered merit in considering these dues as a secured dues instead of unsecured. I think there may be some merit in the facts. That's why it has been done, but which may not be prevailing in all other cases also. That's the way I look at that particular point.
Yes, sir.
I move. Yeah.
Yes, yes.
So, what is the resolution plan? It's, if I say so in a very layman language, the resolution plan is a plan which is proposed by the resolution applicant for resolution of insolvency of a corporate debtor as a going concern in accordance with the provisions of the Part 2 of the IB Code. Resolution process, professional has to follow a process which we have discussed in brief in the model timelines also, where expression of interest is there, where the provisional list is there, final list is there, RFRP is there, evaluation matrix is there, invitation of plan is there. So after completing all this exercise, the resolution plan is placed before the committee of creditor, and after approval by the committee of creditor, it goes to the adjudicating authority for their consideration and approval. Now, the most important and challenging part, which I would like to, what are the challenges with regard to the preparation of resolution plan and why these kind of errors in judgment and errors in drafting essentially happens when we are designing a resolution plan. The biggest point which comes in the way is a lack of complete information. The information memorandum document, unfortunately, in majority of the cases, is a very loosely prepared document. Whereas I'll give you one example, and the ex-chairperson of IBBI, Mr. Sahu, keeps on hammering on this point, and I completely agree that unless and until you showcase the right perspective, the right information, right detail, the resolution applicant is one who is dependent on the information what you supply. And the information memorandum is one document which is supposed to provide him all this insight about the corporate debtor. And if you don't make effort in putting the data in the information memorandum, because though we get some guidance, but there is no prescribed format, and it cannot be, because for each industry the requirement may be different. It is the insolvency professional who has to prepare it considering one objective in mind. This is the document not only to provide the necessary and correct information to the resolution applicant, but also to attract the right kind of buyer, right kind of match, right kind of interested party. Many a time, if you don't put the right information and present it in a right manner, the matchmaking may be improper. And the result is that we have seen over a period of last 7 years, many of the resolution plans implementation is becoming a challenge, is becoming a failure, is becoming subjective, leading to the fatal consequences of liquidation. So we have to be, as an insolvency professional, pay as much attention to the preparation of this marketing document or information document as we are doing for the other processes also. If we are able to put the right information, maybe we can prevent a mismatch, we can get a right value, we can help the resolution applicant in putting the right words in the resolution plan so that while implementation challenges are not coming. We have been doing several of implementation of resolution plan, and with my experience, I'll share you in subsequent slides as to how funny situations have been created, how these small things even have been missed out in the resolution plan, which could have been very easily mentioned in the resolution plan, and the life of a professional who was supposed to implement was very easy. Now, because that has not been done, the life is becoming very, very challenging, very, very difficult. And you don't know, you end up doing a non-compliance because that is a fait accompli. You don't have an option many a times. We'll discuss those situations. But to begin with, I just wanted to give you a heads up as to what the resolution plan is and what it is made up of. Because once we understand the nitty-gritties of a resolution plan, then implementation also is a consequential thing only, and then we can understand and then we will be able to appreciate that. Now, one more important point as to why it is essential at a time of drafting of a resolution plan to take adequate care, because once it is passed with 66% majority of committee of creditor and it is sent to the adjudicating authority, and adjudicating authority, after being satisfied that the resolution plan complies with the condition of section 30, approves the resolution plan, the resolution plan becomes binding not only on corporate debtor, but also on its employees, its members, its creditors, government, local authority, or to anyone who is concerned with the corporate debtor, whether it is a guarantor, whether it is other stakeholder who is involved in the corporate debtors affairs. So if you don't take care of your words which you have chosen, so maybe because the role that the committee of creditor has to play and the role that the adjudicating authority has to play, it is more from a committee of creditor from the commercial standpoint. They may miss out the implementation part. And the adjudicating authority is also not much concerned because their role is limited to see those 4 or 5 bullet points what we have discussed. Beyond that, they don't have much of the scope, and they generally will not go into checking the nuances whether it is implementable or not, and what are the challenges which are going to come while implementation. resolution plan is supposed to provide the measures for resolution of insolvency by maximization of value of its assets. It may provide for transfer of assets of corporate debtor. It may provide for selling of some of the assets, maybe with security interest or without security interest. It may provide for substantial acquisition of shares of corporate debtor. It may provide for merger. It may provide for demerger. It may provide for reduction of capital. It may provide for buyback. It may provide for consolidation. All kind of corporate actions you can think of can be encapsulated in a resolution plan. It may provide for infusion of capital. It may provide for SPV model. It may provide for other mode of restructuring and so on and so forth. It may provide delisting of the equity shares of an entity. So depending on what kind of corporate actions are envisaged in the resolution plan, the implementation plan will also be designed on the basis of the same. It may provide for modification of charges. Maybe your debt assignment may be a part and parcel of your resolution plan. Very, very challenging task. How to now your part of your debt is haircut, and on the balance amount the charge is required to be created. Now if you just see this as a corporate action implementation perspective, now the charge was created, let us say, for 100 crore, and now the value of charge has been reduced to, let us say, 25 crore, and this has been assigned to a new, maybe asset reconstruction company, or maybe some new lender, or whosoever. How this module will be implemented as far as implementation plan is concerned, and at what point of time and through what document, unless we plan how we will achieve what is written in the resolution plan, perhaps we are going to miss out the implementation. Some or other challenge, because if everything is done, you may find difficult how to reduce the quantum of debt in your modification. What document you have to attach in support? Maybe it is a joint charge, maybe it is a consortium, maybe it is some other different way. So for any corporate action, my suggestion always remains the same. You have to work on fundamental. Whenever you review the resolution plan, you pick out each corporate action point and jot down the implementation roadmap. I'm saying not very micro points, but at least the macro points, whether you are able to envisage any difficulty or challenge in the implementation. If yes, then plug that challenge and cover it in the resolution plan itself. I'll give you one more example. In one of the resolution plan that came to us for implementation, the statutory auditor, the plan was completely silent with regard to the statutory audit part. Who will be the statutory audit? And of course, during the CIRP period, the statutory auditor who was prior to this CIRP commencement, statutory auditor, he only continued during the CIRP period also. And his 2-year tenure was left when the resolution plan came for implementation. And plan did not provided for change in the auditor. New management wanted a new statutory auditor to be in place precisely in the backdrop that the management was new and being a listed entity, they were required to do the quarterly reporting of the financial results also. Now the challenge was posed because management wanted a new auditor. There was understanding from their side that because we have taken over a company, we have got a company from a clean slate. Answer is, you get a company on a clean slate, but only to the extent provided in the resolution plan. Have you provided that statutory auditor shall step down or shall vacate in so and so period of time on approval of the resolution plan, and the resolution applicant shall have a right to appoint a new statutory auditor, maybe through a monitoring agency mechanism or through otherwise. Then the life would have been easy. Now difficulty comes because the time when you get a company, monitoring agency is also, or the implementing agency is also in place. Your board is not fully constituted because of the challenges in getting your name updated on the master data, removal of the name of the earlier management. And biggest challenge comes when you require a shareholder approval for any corporate action. Now, auditor appointment is a subject matter of shareholders approval. Challenge was that your existing capital was extinguished, but new capital was yet to be allotted. So technically, you don't know whom to invite, even if you call a general meeting, whom to be invited to a general meeting for voting. If you invite the ex-management, they are not likely to turn up. Your resolution is not going to work. So what I am saying, a small line being missed out in the resolution plan can create a havoc immediately after the approval of the resolution plan. Depending on the case, if your entity is listed, this may be more grave. If you're unlisted, perhaps by that time the situation arrives, you will be in a position to do so. But what message I wanted to give is, whenever I am testing, you have to list out what are the action points arising out of the resolution plan for implementation thereof. Once I jot down all the points, I make a macro checklist as to how the implementation will happen. If I am able to think through 3-4 steps and I am able to reach to the final goal, I think we are sorted. Your problem will be resolved. You will not be having any problem. But if I am stuck anywhere, I think it's a time when you need to go back to your resolution plan, make adequate changes, insert necessary provision, create necessary carve out for approval of the adjudicating authority, so that whatever is included in the resolution plan, you don't require. I'll give you another example. Suppose your resolution plan is silent on extinguishment of existing capital. Sometimes we miss out. We were in an impression that, array, this is so obvious that new management will come. How the new management will come? How the capital will be infused? So the resolution plan provided that a new capital of 50 crore will be infused by the resolution applicant, and in this manner, in this phase, the capital will be introduced. And the capital will be utilized towards 1, 2, 3. The schedule of implementation has been provided. A full lot of 30 pages have been written in the resolution plan on this chapter. But one mistake, that existing capital will be extinguished without following the reduction of capital, caused a problem. Now your resolution plan is silent as to how the existing capital will be extinguished and whether it will be extinguished also or not, because it only says a new capital resolution applicant is going to infuse. The existing capital is 100 crore, new capital you are infusing 50 crore. So if I don't extinguish, you are only 33%. The existing management is having 66% still, they are in majority. How you will control the new entity? How you will be able to steer the organization? Though intent was very clear that the existing capital will be extinguished without following the process of reduction of capital as per the provisions of the Companies Act. But if you don't mention, if you don't do, if you miss out, then it's going to be a challenge as to how you are going to do that, because automatically you can't presume that that has been part and parcel of your resolution plan. Whatever is written, that becomes final. So you have to be very, very cautious in your approach when you put all these terms in your resolution plan. Next is curing or waiving of any breach of terms of any debt. How you deal if there are any breaches. So you have to write one line with regard to the same, that with this, all that will also go away. Reduction in the amount payable to the creditors. That generally is mentioned very categorically. I have not seen any case where it is not there. Extension of a maturity date or a change in interest rate. This is also generally a part of amendment in the constitutional documents of a corporate debtor. Many times a corporate debtor is supposed to change the line of activity, and we miss out incorporating adequate clause in your memorandum of association, which is enablement to carry out the business. And in many of the cases, after approval of resolution plan, up to next 6 months, you're not able to structure your capital. You're not able to hold your general meeting. Now you are in violation because you have not amended your memorandum of association. If you have not already incorporated enabling provision in your resolution plan. Issuance of security. Generally, this is also there. But reduction of capital is something which generally misses out. change in technology is because generally the technical peoples prepare. So these are things which are not missed out, but yes. Mandatory content, if I talk about from the law perspective, amount which is due to the operational creditor.
Excuse me, can
Yeah.
I ask you a question?
Yeah.
In case of new issuance of shares to the resolution applicant or SRA, what procedure is to be followed? Just as per Miss
I will
due to the
explain.
approval of resolution plan and apply to ROC. Means what? I'm not sure about that.
I will tell, although I have a separate slide also, but I'll
Achha.
tell.
Okay, no problem. Then you can.
I will explain, Vaishali.
Okay.
See, if you have specifically created a para in your resolution plan, that resolution applicant will infuse X amount of capital in so and so tranches, and the company will issue shares without following any process prescribed under the provisions of Companies Act or securities law. No further action, no general body meeting, no board meeting is required to be conducted for the purpose of issuance of that capital. Of course, the monitoring committee will take note of the action plan that on so and so date the capital has been received and the allotment resolution has been filed. You will file simpliciter PS3 for implementation of issue of capital, attaching a copy of relevant extract of resolution plan. I'm not saying you attach the full copy of resolution plan because that's a confidential document in any which case. But what the methodology we have been doing, we are taking the relevant extract of the resolution plan, making a certified true copy, attaching a copy with the pass-3 form, without passing a board resolution, without passing the shareholder resolution, you are able to create a capital. But if you have not mentioned in your resolution plan as to how the capital will be inducted, or you have been silent with regard to the capital infusion and issuance, then you don't have an option. You'll have to follow the provisions of section 42, 62 for the purpose of issuance of new share capital. And MGT 14 will also be required to be filed, and pass-3 will also be required to be filed. And the whole lot of process wherein convening a general meeting, convening a board meeting, giving a letter of offer to the resolution applicant, although it looks foolish, but if you have not specifically mentioned in your resolution plan, unfortunately, you will be compelled to do so. Because then what you will attach in your pass-3 form, because you have been silent on the issuance part. Is that okay, Vaishali?
Yes. And related to extinction, sorry.
For extinguishment also.
Of the shares, huh?
For extinguishment also, you need to have a very clear para that all the, in case of a listed entity, maybe you are not extinguishing the public shareholding. So if public shareholding is, let's say, 26%, you are extinguishing only promoter portion. That is also possible. So you have to mention, you have to create a para in the resolution plan, extinguishment of capital. You will specify which capital will be extinguished, what will be the mode of extinguishment, without following the process of reduction of capital, without following any other process prescribed in the Companies Act or securities law, the capital will of so and so persons will stand extinguished, right? If you are mentioning this, then you don't have to do anything. Otherwise, I am afraid many of the professionals, though, are not taking that route. But who has given you the authority? Because your resolution plan is not saying anything about the extinguishment. Can you reduce the capital without following the provisions of Companies Act? Answer is big no. So unfortunately, in that case, either you'll have to file another application or you'll have to go to the NCLT again. Maybe NCLT will approve subsequently. But point is that you have not only delayed the implementation, but you have created unnecessary hassles also. Again, I am repeating for cost of clarity. Whatever you want to achieve as a resolution applicant, post implementation, you should be very clear and you should be able to get it perhaps vetted from, I'm not saying because I am a company secretary, but to some company secretary who is day in, day out in the secretarial action points, who can tell you as to whether you require this kind of tweaking of language or not. So you are sure that whatever you have written, I'm not saying you share the whole lot of resolution plan, but 10, 15 action points of the resolution plan, which are secretarial, which are relating to Companies Act, which are relating to securities law, which are relating to FEMA, which are relating to competition, which are relating to tax, should be vetted very thoroughly. That if there is anything, so your plan becomes smooth. Otherwise, anything which is flowing from resolution plan does not require a single board resolution, does not require a single shareholder resolution. It can be implemented straight away. I'm saying straight away. You don't require monitoring committee is only for information that yes, I have done. Even if you don't do, it is okay. They are only to be informed that yes, I have done. That's it. No action as far as the board or shareholder approval is required. No approval of government even is required in those cases. If you have done that kind of homework at the time of drafting of a resolution plan.
But this means that reduction and new infusion has to be in one go to avoid the problem, right?
Of course, because if your resolution plan is saying that existing capital will be extinguished,
yes,
and a new capital of 50 crore will be infused by the resolution applicant. Of course, it is simultaneous. So you will be filing a form for infusion of capital, and then you will be filing a form for reduction of capital.
In the same pass-through only?
Same pass-through, it will not be possible.
Achha.
Technically, you will be required to file two different forms, right? But simultaneously,
first will be infusion and then reduction. Otherwise, it will be zero.
Infusion, otherwise, your capital will become zero.
Yes.
Right?
Yes.
So you have to have a capital, otherwise system will not allow. So that is what I'm saying. These are fine technical points which some secretarial team will be able to assist you while you are drafting your resolution plan, and they will be able to choose the right words in your resolution plan so that you are not stuck at any point of time in later. That's the crux. Choosing a right word is important so that you don't end up going for any approval. Maybe so far not many post-implementation audits are done by IBBI with regard to verification as to whether full compliances in implementation has been done or not. But I am sure times will come when the IBBI team will appoint a set of professionals to monitor whether the implementation has been done in tandem with the plan approved. Although the responsibility presently is on the monitoring committee, and monitoring committee does. But monitoring committee is more concerned, to be very honest, without hurting anybody. They are more concerned with the numbers, with the money. If I have to repay, let us say, a financial creditor with 50% haircut, they'll see whether 50% haircut has been done and the adequate amount has been paid or not. If a operational creditor has to be paid 10%, so all these numbers, wherever coming, they will be able to monitor and they will be able to do that very meticulously. But when it comes to the secretarial task, unfortunately, they are not having a focus on the same. But tomorrow, if IBBI starts the process, or tomorrow, suppose you are a successful resolution applicant and your company goes for listing 2-year, 3-year, 4-year down the line, and you have to undergo a due diligence process. Your merchant banker, your due diligence team might raise all these questions that there was a gap in implementation. There are n number of issues which can be arising after you are going for implementation, right? So the doing of a fine wording, I think, is the crux, what I understand.
Yes, thank you.
Then resolution plan is also supposed to include a statement as to how it has dealt with the interest of stakeholders, financial creditor, operational creditor. This is okay. I think by and large, we are able to see all the resolution plans which are including this part very nicely. It will also give a statement giving details if the resolution applicant or any of its related party has failed to implement. This is a statutory requirement, so there is nothing unusual about it. Then it says, the resolution plan shall provide what is the term of plan and what is the implementation schedule. In majority plan, this is very nicely captured, very nicely supplemented by the words and tables and the charts. So generally this part is okay and takes care of some minor delays also. Management and control of the business of the corporate debtor during its term. Now, many a times the resolution plan does not talk about the new management. Now, resolution plan is approved. Your plan does not talk about the new management. How you will induct a new director on the board? Will you call a board meeting? Now, board meeting cannot be called because the board is not in existence. The previous board who has ceased, who has vacated, he is not supposed to induct a new director. So a resolution plan has to specifically provide a table saying that these will be the new director of a corporate debtor effective from the date of approval of the resolution plan. Chapter end. Now, either your existing management, KMP, company secretary will be available for filing of these forms, or he may be reluctant in filing of these forms. If he is reluctant, still, because your resolution plan talks in black and white about induction of these peoples, you can go to Ministry of Corporate Affairs, raise the ticket, and they will allow you to induct a new director. So your new director name will be coming on the portal and rest of the action points can be taken therefrom.
But when RP has to file the form, or they have to, no?
RP, unfortunately, in many of the situations is not able to file these forms. He may facilitate. That is what I am saying. Practically, understand. Now, I think MCA has provided the IRP also as a signatory, but he has to do certain formalities while he is doing the filing of this particular form. So in most of the cases, what we have observed that he is not able to complete this filing and he has to go in a backend for the purpose of appointment. First option is either the existing management, somebody, some company secretary or CFO is available. So we can use his digital signature for the purpose of filing the form. If that is not the case, then we can check whether IRP, whether RP can help us out in filing this particular form. Now, and thirdly, if it does not work, then we have to go to the backend team of the Ministry of Corporate Affairs with a request that resolution plan provides for so and so induction of a director, and we have no person available whose digital signature can be used, and so they will allow and induct the name without following any further process, and from one appointment you will be able to make the other appointments as well. But
then for that,
sorry,
whether that SRA has to give formally the names of the director and any board resolution of those SRA is required or not?
No, if you have mentioned in the resolution plan that Mr. A and Mr.
No,
B,
they will
that is sufficient. Because
they will name the directors.
The resolution is not required because for SRA, entire resolution plan is approved by them.
Yes.
Right.
But
so,
sir, what happens if SRA says that, the resolution plan says that the SRA will be appointing, his team of directors without naming anyone?
In that case, I think RP has to appoint one.
Even in those cases also, problem will not be there because SRA has the power to nominate two directors on the board of corporate debtor, right? So with the resolution of SRA, you can induct the person by giving a request to the existing management or to insolvency professional or to the backend team. But if your plan is silent with regard to the change in management and induction of director, then perhaps there would be a greater difficulty. If your plan says that, all right, SRA will have the power to nominate two director or three director or necessary number of director on the board. But we prefer, if a matter comes to our advice, of course, situations are different because the resolution plan is prepared almost a year back. Yes. And many times you don't know whether this person will continue in a company of SRA or not, because he has to be nominee of SRA only. So many times the practice is that they just mention that they will have a right to nominate. But if possible, now where we know that these people are in any case going to be nominated, then we prefer the name to be mentioned. So it becomes very easy because psyche of a people who are sitting at a back end of the Ministry of Corporate Affairs is little different. If a name is available, it becomes easy. Name, DIN, other details are available, then it becomes easy that they can straightforward take it on record and upload it on the master data. Otherwise, it may take some back and forth. They may ask for some queries, clarification, and then you may provide and then they may do. So given the choice, you mention the name. If it is not possible, then the other way is also okay. I don't see any challenge in doing so.
Means only the nomination by the SRA is required.
Nomination by SRA, correct. If
with their board resolution or with their only letter.
CD resolution is not required. If a mention in the resolution plan is there that SRA will nominate a person.
But SRA with by letter they will nominate or
by letter.
Okay.
By letter, and maybe I'm saying with my experience, they will say that you provide a resolution of SRA that they are nominating a person. Right?
And if it is a consortium, then from all members of SRA.
From all members, yeah. That is what I'm saying. So all these, like you have added one complexity. If there is a consortium, now who will give that letter? If a name is there in the resolution plan, life becomes easy. All the consortium members have already approved. Yes. Right. So this is to avoid the problem. We have to go step by step. If I am ruled out that name cannot be given, then go for option 2. Otherwise, give the name. That's the choice that we have to explore. If not working, then go for other option.
Yes.
Then it shall demonstrate the address the cause of default. These are, I think, technical part. This has nothing to see in the implementation part.
Sir, just
Yeah.
1 second. Can you go back? With regard to the feasibility, it is feasible and viable.
Hmm.
So, what exactly the meaning of feasibility and viability, which is to be certified by the resolution professional also, I think, while submitting the plan to the adjudicating authority?
It is very, very, very subjective and dynamic, because from each corporate debtor perspective, the feasibility and viability will be different. If you see, the feasibility has to be seen from many standpoints. One standpoint can be the cause of default was identified in your resolution plan. Have you been able to address that cause? Suppose the cause was a lack of working capital. If it was only a fund infusion, you are saying that, all right, there was a shortfall of fund. Now we are able to infuse the fund. We have a more healthy financial partner. The feasibility is there. Now, if a complexity is there that the technology is obsolete, and your plan says that no, we will revive. You on one hand is saying that technology was obsolete, due to which the company or corporate debtor has failed. And you are not bringing a new technology also, and you are saying we are submitting a resolution plan. How this contradiction can be justified? It cannot be feasible, because your technology is not feasible. So you have to see it from that perspective. Viability is whatever you are saying, that suppose there is a obligation to pay 100 crore in the next 4 years, out of which 50 crore is paid upfront, and another 50 crore has to be paid out of generation from the corporate debtor operations. Now, if your corporate debtor operation on the simulation test or on the exercise of test, they fail, that it is not having a viability, that whether you will be able to generate another 50 crore in the next 4 years of time. You are able to generate only 30 crore. Your plan itself on the face fails. So feasibility and viability has to be seen from many standpoints. It depends what kind of corporate debtor entity is, what kind of business they have been doing, what kind of defaults there were, what was the reason of default, how the curing has been done, and what is your strategy to resolve. It is not just about the finance. If let us assume that you were talking about market dynamics. Now, you are saying that the plan failed because there was no demand in the market. Now, unless you justify in your resolution plan that that demand will be created, demand exists, but the corporate debtor was not able to tap that demand, so they failed. But now these are the ways and means by which I will be able to create a demand. I will be able to generate a demand. Then I think the feasibility and viability will be passed. But again, as I said earlier also, it has to be seen from individual resolution plan perspective more, and it is more about holistic evaluation of a resolution plan than giving certain yardstick as to you make these ratios, you test these KPIs, and your resolution plan is over. Yeah, of course, KPIs can be one of the parameter. The testing on these lines can be one of the parameter, but they cannot be the sole parameter. It has to be tested holistically in light of the entire plan.
Okay.
I hope it helps.
Yes, yes. Yes, sir. Thank you.
Yeah. So, all right. So if we see, I'm sure we all are aware about what the content of a resolution plan is. Generally, it will have a definition, interpretation, why it is relevant if I am using the same term 10 times. Again, I don't have to, if I have a very specific meaning which I want to convey in the entire resolution plan, I'll have a definition for the same so that confusion is not there. Interpretation is general interpretation, that singular include plural, general grammatical interpretation, all. And one more interpretation, that unless the context otherwise require, the meaning of this particular term will be so and so. Generally, we put that kind of, because maybe you are using certain technical term which has been defined, but that technical term may be used in the general parlance also. So you have to create that exception also. Corporate debtor history is, of course, very important that we mention. Who is the resolution applicant? What is the credit worthiness, financial capability, prior experience? I am not looking into the content which are not directly related to implementation. We will come to discuss those parts where the implementation is having a challenge, right? Prior experience, credentials as required by regulation 38, all right. Financial plan. In financial plan, you'll have to see, because it will have a change in the charges which are registered on the Ministry of Corporate Affairs portal. Security that you have given. Maybe a new lender is coming. Old debt is retired. So you have to see it from the perspective, what is the tax implication of these haircuts? What is the implementation strategy of these changes in the settlement, haircuts in the creditors, change in security, change in extent and operation, classification. So you have to visualize at this stage, while you are mentioning in this particular para, that you are intending to make settlement by way of making X amount of payment and Y amount of haircut. Now you have to just add one more column internally for you as to what will be your action point 1, 2, 3. If you are able to reach to the final goal, that yes, I will be able to register this charge on the ministry portal, you are done. That means this passes the muster test of implementation. Otherwise, you'll have to tweak. Restructuring of corporate debtor. This is very, very. Now, restructuring may involve a merger. Maybe you are proposing to merge corporate debtor into a successful resolution applicant. Now, for this, you'll have to prepare a scheme of amalgamation in terms of the provisions of the Companies Act. Attach it as an annexure to the resolution plan to avoid any sort of confusion with regard to the amalgamation. Otherwise, what will happen? If you just write one line, I've seen one of the resolution plan while doing the implementation. They have only mentioned one line, that corporate debtor will stand merged with successful resolution applicant with effect from date of the approval of resolution plan. Now you just can't imagine what kind of challenges it is going to pose with regard to implementation. There will be 100 of challenges, because if you see, when you prepare a scheme, then in scheme you cover whole lot of, there are 20 paras, which each para covers a different aspect. And you are defining each and every para. So my suggestion always is, don't do one-liner work saying that this will stand merged or this will stand demerged. You have to prepare a whole lot of scheme, which is something very similar to provisions of the Companies Act, and attach it, make it an annexure to the resolution plan, so that when your resolution plan is approved, that annexure is also approved. And in that, the implementation of that scheme of amalgamation also is there. So by following that, you are able to implement, whether it is a merger, whether it is a demerger, whether it is a reduction, whether it is a buyback, whatever, all kind of corporate action, whether it is a squeezing, whatever you say, whether it is a maybe a delisting kind of situation, everything can be captured. But point is that you have to figure out how you want to articulate that particular corporate action in your scheme. Suggestion is that it should be a separate annexure made part and parcel of the resolution plan itself. Don't try to club it as a running para of your resolution plan itself. It will lose its sanctity, and the resolution plan, while approval, will also get little clumsy. Now, people will not be able to understand. So once you make it a addendum or annexure to the resolution plan, it will be easy for the purpose. Classification of creditor is all right. Extinguishment of claim, we have discussed. How relief, concession and dispensation, I think this is very important. What kind of reliefs, what kind of concessions, what kind of dispensation, because you may ask for the moon. I have seen typically that you ask that stamp duty waiver should be given. The law and the circulars issued by IBBI time and again have specified that if you want to seek any specific waiver from some third party, you have to bring that approval separately, either prior to placing the resolution plan or separately. We also claim relaxation under the income tax law. Unless the relaxation is already part of your statute or has been clarified by circular of IBBI or CBDT, you cannot assume that just because you have mentioned something in your resolution plan that relief is going to be available. Technically, you may continue to claim. Nobody is, if monitoring, no, maybe you end up not being asked to pay, but at some fine point, if a diligence start or if some monitoring is done by some agency, you may be caught and you may be asked to pay certain taxes and duties on that particular part. Cleanup action may be required from a your financial statement perspective. You want certain cleanup exercise. There are certain accumulated losses which you want to write off against your haircuts. Well, do that, but do that as a part of scheme, so that you're not tomorrow in trouble. Just writing one line maybe end up putting you in some trouble. If So what kind of cleanup you are proposing, depending on that, you can prepare so that the implementation is easy. It is not just like you have mentioned and now you have not mentioned anything. Now your auditor is also questioning, boss, basis this one line, I cannot clean my balance sheet for the first year after implementation of resolution plan. Though it is part, but he needs something more. He needs a clarity as to what manner. So if you attach an annexure that this is how it will be done, maybe the numbers are not there, I'm okay with that, but at least the methodology that will be adopted, the philosophy that will be working behind, I think that is very important for us to give a go ahead for the implementation. Implementation plan is okay. Term, I think we have discussed. Mechanism regarding the management and control, I think we have discussed this out. Plan is not in contravention. I think sources, these are all technical terms. I don't think I think this is also done. If I come to the table, typically, this may vary from company to company and corporate debtor to corporate debtor. Typically, your plan will be approved. It will be requiring issuance of letter of intent. With that, your process starts. Submission of performance deposit and acceptance of letter of intent. It has to be done in some defined time. Resolution plan is approved. You intimate to the concerned authorities. Now you come to the part 2, which is regarding the implementation. You execute the material agreement. There may be haircut. There may be scheme. There may be certain other action points which you are required to engage in and enter into. So foolproof your document.
Sir, can you increase the size a bit of the slide?
Okay, all right. Let me try. Is this better?
Yes.
All right. In any case, I will share the presentation, so no worries.
Yes, sir. Thank you.
So you have to first action point, although I have discussed, and what we are doing is if a chance is with us to do that. So whenever we are preparing a resolution plan, we also give a implementation roadmap as to what are the 100 points and in what order with a timeline. The timeline is X, X plus 1, X plus 2, X plus 3. Like we prepare and we give it to the successful resolution applicant or while preparing the resolution plan itself. If that is done, my job is easy if I am an implementing agency. Otherwise, I'll have to prepare. First thing, when you get an assignment to implement a plan, is to prepare a action plan, is to prepare a roadmap as to what are the, you have to read each line several times of a resolution plan to flag as to what is the meaning and how it has to be achieved and what is the roadmap. For divide each and every action point and then compile it with a time chart. Put it in an order in increasing. Now, X date action point will come first, and then maybe activity wise also, you can break it out. And basis that, you start doing the action. Monitoring agency, monitoring agent is now in any which case part of the law also. So it has to be, without that the even resolution plan does not come. Infusion of fund will have a closing date. Along with that will be the capital as to when the new capital will come into place, suspended board of director and new board of director, transition plan, IRP cost, payment to the operational creditor, payment to the financial creditor, right? These are some indicative one. I'm not saying these are the exhaustive one, but the checklist what I had talked about in the beginning, that is the key that you have to
in the earlier slide,
yeah.
payments are means the responsibility of the monitoring committee. But
So,
the SR
please, monitoring committee is
to overcome
an
supervising.
overall agency to overlook only. Please understand, right? Because IRP will be over. IRP becomes functus officio as soon as your resolution plan is approved, right? COC is not also in place after your resolution plan is approved. So then who will be? So monitoring agency is now a part of your resolution plan and now the part of the law also. So monitoring agency is one who has been given the responsibility to ensure that whatever is contained in the resolution plan in the spirit has to be implemented. They are given the responsibility and they submit the report also to IBBI from time to time.
But then which bank account is to be used? SRA will from their bank account will pay, or they will infuse in CD's account. And
so that's a very good question. We have never advised that SRA should pay directly to outside creditor, because that will pose a challenge in your finalization of your balance sheet next year, and the auditor will also put a lot of questions. If you have to infuse 50 crore for making a payment to a financial creditor, you infuse that money in the corporate debtor in terms of the resolution plan. From corporate debtor account, you make the payment as per the implementation schedule. We don't advise a direct payment to the third party from the account of SRA.
Okay, but then who will operate the account? When the new directors will sign the check.
That's why it is important that you figure it out in your resolution plan itself as to who will be the director. So the moment resolution plan is approved, you know Mr. X and Mr. Y are director, or you get it dominated from SRA, and then you start operating the bank account. It may take some time. So of course you have to factor that in mind, that a week, 10 days time will be required to complete this process, and after that the payment cycle will start.
Okay.
That does not mean that we bypass the channel. Otherwise, next year audit will create a problem. Next year finalization of accounts will be problem. Means how you will do technically the accounting is a question. Otherwise,
RP, who is the chairman of the committee, whether he will sign the
on what?
the payments.
So, Vaishali, how it happens, I have seen a resolution plan where up to next 3 months, there was no board member inducted. Where monitoring agency was to do all the activities until the 3 months period, because there was a SPV involved. A consortium has bidded for the successful resolution as a successful resolution applicant, and the plan provided for the 3 months period. The monitoring agency will do all actions on behalf of the management. There will be no management other than that. Right? So it depends what you have mentioned in your resolution plan. Basis that you will do the implementation. But just be very sure that whatever you are writing is implementable and it's not causing any problem. Because there was a lot of payment and a lot of shuffling of charges was to be done. That was a starting point. So we envisage that 3 months time in any which case will be required for the purpose of cleaning up exercise, and after that the new management directors and other people were inducted after doing first round of shuffling. So it purely depends what you have mentioned in your resolution plan, basis that you will do.
Okay, you told about something, the amount is reduced for the payment of secured creditors. Say 100 crores is the payable,
Correct.
but in resolution plan it is provided 10 crores, suppose.
Correct.
20 crores a haircut. Then whether the charge of 100 crores is to be reduced to 10 crores, that whether it is to be done or not.
It has to be done, because if
When?
your 10 crore debt is to be going to be surviving, maybe it happens that you are paying 10 crore upfront and charge is going to be satisfied. All right, not a problem. But what if 10 crore is going to be paid 1 year after and charge will proportionately, security is also going to be reduced. Some of your charges are going to be released.
Okay.
So it has to be a modification of charge. And in many cases, your debt is with already with asset reconstruction company. So from you have already done an assignment. Now from assignment, you will be doing another modification. Now, so you have to, that is what I'm saying. You have to create a roadmap as to how you will achieve for each and every case. A, reduction in amount. B, change in terms. C, change in security. How many forms you will be required to file, what document you will attach along with. I think that planning is required. If you are able to do that planning, you'll be successful in implementation thereof without much of the difficulty.
Sir, can I have a doubt? Can we go back to the previous slide, please?
Yeah, please.
Here, the last portion, payment of IRP was next one, second one, last
Operational creditor.
payment to operational creditors in priority.
Correct.
To financial creditors. So here, sir, say home buyers is a financial creditor, home buyer class. So suppose it's a hypothetical question I have. So for example, if a home buyer is there and SRA, can he not start executing his work of a particular flat before settling the operational creditors, or only the handover to a home buyer is the issue? Like, for example, before handing over a flat or apartment to a home buyer, SRA has to pay the payment for an operational creditor, payment in priority. This is what I understand the priority payment meaning.
See, payment and handover are two different things, right? I'm not able to follow your exact question, but what I understand essentially is you are talking about a home buyer case where
I'm talking about payment to operational creditors in priority in the context of a home buyer class. For example, there are home buyers as well as there are operational creditors in a particular, case. So if home buyers are involved, of course, they are financial creditors. When we say payment to operational creditors in priority over home buyers, meaning as an SRA, I have to execute some work for the home buyers. So can I not start?
I will explain.
Yes.
Please don't confuse this with two things. One, when I'm saying payment, that means payment to the operational creditor in cash. Perhaps you are envisaging a situation where operational creditor who are to receive a constructed property, now whose flat was partly finished, and as per resolution plan, the
No. So I'll make
successful
it clear.
resolution applicant has to deliver them a complete property, or maybe in many cases the option A, B, C are given, and basis that they choose. So if a obligation is to make a payment to the operational creditor, that has to be done in priority as per the resolution plan schedule before the payment to the financial creditor. That is the only obligation. Otherwise, there is no difficulty. You can continue to start your work as far as your implementation of resolution plan is concerned. If I am able to make your
Yeah,
point.
yeah, yeah. Yes.
So, from prospective resolution applicant perspective, I think I have discussed a lot. So we'll skip couple of COC role also we have discussed, and CLT and CLAT judgments. I'll not come. I think extinguishment also. Let me see you to certain. Now, once you are back to out of insolvency, and now your entity resolution plan is approved, all the provisions of Companies Act will have to be complied with, and resolution professional is no longer there, and power of board no longer remains suspended. So all your decision making has to flow from board of director. You have to understand section 179 of the Companies Act. All powers of the board, all powers of the company vest with the board by default, minus those powers which law says are to be exercised by shareholders, minus those powers which the article says are to be done by shareholders, minus those things which are mentioned by way of a resolution are to be done by the shareholder, or for which some third party like central government or some statutory authority approval is required. Meaning what? That after approval of your resolution plan, you have to ensure whatever action you are taking is in compliance with provisions of section 179. Now, how you will achieve that? Majority of the resolution plan fails to envisage compliance of section 179 in their resolution plan. Option could be you can vest all statutory and administrative powers by virtue of resolution plan in certain monitoring agency during a transition period, which may be one month, which may be 2 months or 3 months. So that in the initial phase of time when you are not having your board in place, when you are not having your shareholders in place, or by design itself, you are not able to have these peoples, you're not in violation. I hope you are able to follow, and I'll not give all the details, but I'm just indicating there may be a requirement of borrowing power. Section 180 says beyond this, you require a shareholder resolution. Now, immediately after, maybe your resolution plan envisages that you will borrow 50 crore from State Bank of India. Now your board of director is not in place, your shareholder is not in place. From where you will achieve 180, 1A approval, 1C approval? You are stuck. Your bank will say, boss, I need the approval of shareholder to disburse the loan. Otherwise, I cannot, because you are not having any power. On the contrary, if I have included in my resolution plan that notwithstanding the provisions of section 181C, the company will be able to borrow this much of money which is required for implementation of this resolution plan from the State Bank of India. No resolution required. You can give that extract to your lender, he'll be able to provide. Similarly, provisions of section 186. 186 says, if you are granting some money, if you are investing, if you are making loan, if you are giving guarantee, or if you are providing security to other entity, beyond this limit, you require shareholder approval. If you want to invest money to other entity, you require board resolution with unanimous approval. If you are lending money, you cannot do at rate below what is mentioned in the 186. Now, where is your board? Where is your shareholder? You are stuck. Cover it up in your resolution plan. If you have an intention that you will create an SPV for the purpose of implementation of resolution plan, so that you can make a conduit of transfer of money from holding company to your subsidiary company or to your SPV. Similarly, for your related party transactions, 188, 177, law requires approval. But if you create a carve out, assuming that one of the related party of your corporate debtor will be supplying the goods, or you will be supplying the goods to a related party, you don't require separate approval. The point that again I am repeating is, you have to envisage what kind of action plans will be required for implementation of this resolution plan. If you are able to envisage, you will be having a smooth sail of implementation. Otherwise, you will be having a tough time. These are few of the provisions. There are many more. I am just giving you an indicator. Because the moment you are out of insolvency, everything is applicable on you. Whatever you have not provided in your resolution plan has to be done only in compliance to the provisions of law. You cannot take it for granted that no, I am a resolution plan. I have a resolution plan, I can do anything. Believe me, you may have a tough time tomorrow answering to the regulators. If God forbid, 2 years down the line, the investigation happens in your company and Ministry of Corporate Affairs investigates your records, they'll make your life tough by asking these questions which are beyond the purview of resolution plan, and you have implemented in the garb of resolution plan. Answer is simple. You can do everything, whatever you can think of legally in the frame of law by incorporating adequately in your resolution plan. If you take care, you are sorted. Otherwise, you will be having a difficulty. Suspension of power, I think, is not a relevant subject. I thought I'll discuss out only from the standpoint that when your company goes into the insolvency, the powers of the board is suspended. It is not the board that is suspended. So when you revive, when your resolution plan is approved, the board assumes the power back unless and until you provide adequately in your resolution plan. So it is very important that you cover this particular aspect very nicely in your resolution plan. Otherwise, the powers which were suspended, maybe your board members are not there, and the existing board will have the sufficient powers, and they may pose certain kind of legal hassles and challenges, though we have not seen any case where such kind of challenges have been posed upon. I think meeting of board was never exempted, and post implementation of resolution plan, you have to ensure, being a corporate entity, that one meeting in a quarter. So if you have to have certain waiver, right, as I was saying, that you are moving in a transition, you are saying that my board will be constituted 3 months after. You make adequate waiver with regard to compliance of section 173 and regulation 17 as well, so that you are not in difficulty of allegation that you have a violation with regard to the compliance of section 173 and you have not done adequate number of meetings. Certain corporate action specifically, again, we are discussing, although we have covered, I think, by and large, but let us see, maybe something new is there. Issue allotment of shares, change of director, change in KMP, reduction of capital, buyback. I think very clearly I have mentioned no approval of board. Shareholder is required for implementation of any corporate action which is arising out of resolution plan approved by the adjudicating authority. I cannot write anything more clearer than that. So saving is whatever you include, you are out. Whatever is not included is not exempted. You have to take mention. However, all actions which are not specifically covered in the resolution plan shall require approval of board, shareholder, regulatory authority. No confusion on this part. Related party transaction, borrowing power, investment needs to be specifically taken care of. These are the areas which are most commonly missed out. Take my words, see the resolution plans which have been approved. You will find out how these entities have done the compliance. They have a very, very tough time. The resolution plan provides for vacation of office of statutory auditor on closing date.
What is the meaning of closing date?
Closing date means your resolution plan may provide that my plan will be approved on so and so date. Either my resolution plan approval will be the closing date, or there may be some extended closing date 1 month after or 2 months after, depending on the.
Is it effective date? Is it effective date?
Yeah, you can say where the scheme is there, then that is the effective date also, from where the timelines will start basically. Because everything certified true copy receiving will also take some time. So depending, many of the cases we say the closing date is the resolution plan approval date, or we say the obtaining of the certified true copy, or we say the filing of INC 28, or depending on different circumstances, we mention as to what has to be done. Compliances is, I think, mandatory during even CIRP and even post CIRP also. There are several circular which have prescribed the filing of certain forms. So I think the latest one was March 2020 circular, which has also now been a bit of tweaked. Now INC 28, I think, has taken care of majority of the difficulties with regard to the change in status from under CIRP to active and vice versa. Earlier, it was not done. Now we have done a lot of representation with IBBI, and IBBI has created a mechanism wherever the IBC section is selected. You have to fill the form very carefully. If you have selected the right icons, right options, the form will automatically, as soon as is approved, your status will get changed. Earlier, IBBI used to write a communication to ministry, then ministry used to do, and it was taking about 15 to 30 days of time. But now I think that has been streamlined. There are certain forms like GNL, which are provided specifically for the purpose of filing all these forms, like filing of balance sheet during the CIRP period. Now, question comes, though I have an immunity as a successful resolution applicant under section 32A, that for the past defect, I cannot be prosecuted. I cannot be levied fine. All right. Now you are a going concern and you have to do a banking. And your banker says you kindly provide the copies that you have filed with the registrar. What you will do? Your during CIRP financial statements have not been filed. No AGM has been held. Whether you would like to do the compliance post implementation or as a part of implementation, my answer is you will be having no choice, though you have an immunity. But from banking perspective, you maybe end up doing those filings which have been missed out. If you are going for a liquidation, I could have understood that you have a protection available and nobody can touch you and no penalty can also be levied. But if you are going to be a going concern, legally you have not filed, nobody can touch you. But practically the bank will not lend you. So you will end up having a difficulty. So you have to consider it from the standpoint of the requirement as to how you modulate in between the two. From securities law implementation perspective, there are a lot of exemption. IBBI circular is already there. Then LODR amendment, which first time came on 31st of May 2018. Then the amendment was done in January 2021. And the disclosure requirements were modified. If you recall, prior to 31st of May 2018, if your listed entity was going to CIRP, there was no mention in the Schedule 3 as to when you will trigger the disclosure. Though, considering the materiality the companies were doing. But first time in May 2018, the law was modified to clarify that if your financial creditor files a insolvency, you have to immediately inform. If operational creditor files, then if a application is admitted, and whenever your resolution plans are approved, considered, COC meetings are taking place, you have to inform time to time. Whenever you are doing there was a guidance note, companies which are undergoing a corporate insolvency resolution process, for them a new disclosure requirement was issued. These were few of the prominent companies who were listed and their resolution plan have been considered and approved. But let us see what the law is. I'll just take another maybe 10 minutes. After that, we'll open for question answer. I'll be done with my presentation. But just another 5-10 minutes for understanding a bit of nuances of the listed entity perspective also. Under Regulation 30, the challenge was that the disclosure is required to be made on the stock exchange portal. And now all disclosures are made through listing center portal. And that has a login ID and password. When a first listed entity came to us for the CIRP admitted, I was appointed as the IRP. I was running from pillar to post to get my login ID from the stock exchange. I wrote email to stock exchange. I got a revert that you ask the company and to the company secretary to upload this information. I wrote to them. 1 day passed, but they had not uploaded because they were in process of filing an appeal to NCLAT. So they were thinking that by avoiding, they will be able to control the damage, that bad name that has come for them as a CIRP process commencement. I took up the matter again to BSE. Fortunately, they agreed and they provided us the login ID for the purpose of uploading the necessary document. Just give me a second. I'll just be back. Just yeah. So first challenge, I was just sharing that experience. So now the law has been clarified, and whosoever is appointed as a IRP of a listed entity, either he can request to the company secretary or KMP of a entity to upload that information on the portal of the exchange, or he can be provided the login for the purpose of making necessary compliances as well. An exchange has to identify and tag the security. Now, if you go on the exchange portal, if your entity is in CIRP, you will get a tag that this company is in CIRP. Earlier, it was not there. Exchange will continue to provide alert at the time of order entry. That means if I am a investor, if I punch the purchase of security which is under CIRP, I will get an alert that this entity is in CIRP. If I want to sell, so that they can take an informed decision. In the instances where resolution plan provides that the value of the listed security is considered zero and company to be delisted, or where the entire capital is reduced, cancelled, extinguished without any payment to the existing equity shareholder, exchange in coordination with each other, that is BSE, NSE both, and based on intimation of the oral order from the company RP confirming the aforesaid provision, shall suspend the trading of the company on immediate basis.
But how is it that it is an obligation of IRP
I will
after the
tell.
approval of resolution plan?
I will tell. See, your first, if you are a resolution professional of a listed entity, the first challenge that comes to you in implementation, your implementation starts from the pronouncement of order where capital is reduced to zero or the payment to the existing holder is zero, because it triggers the suspension on immediate basis. And it is not from the time when you are supposed to get the certified true copy. It is from the time of oral pronouncement, because this is a price sensitive information. Now, question that madam has asked, how you will come to know? Generally, what happens when your matter is heard and it is reserved for pronouncement, you know what is the date of pronouncement. On the pronouncement day, if you are a RP of a listed entity, this much of pain you will have to take. You have to be logged into the portal or your counsel, and through him you have to take the information as to what was the pronouncement. Is there anything on this? If there is anything on these lines, what we have talked about, you have no choice but to inform to the exchange. Many times adjudicating authority may not pronounce all these things during the course of pronouncement, during the open court. If it is not done, wait for the order. After the order is received, then your trigger time will start. I hope that addresses.
Yes, but whether
Huh.
that mentioning of, they say, reduction or everything is not mentioned in the order, and they say ki you take appropriate approval from the appropriate
Madam,
authority.
please don't confuse. It is only about one situation. Please read. Where entire capital is reduced. If you are a listed entity, your capital is reduced. Existing capital is reduced to zero, cancelled or extinguished without any payment to the existing equity capital. That means your value has become zero. And if they continue to allow the trading, it may be a loss to many of the shareholders. Right? So, because many people may be trading at the cost of the others, the law has been made like that, that somebody has to be vigilant, and as soon as the information, this which is price sensitive, is known, has to be disclosed. If the information itself has not been created during the pronouncement and has been deferred for the order, you wait till order. And if it is not a part of the order, then you don't have to worry. You getting?
Yes.
If your existing capital is not extinguished, is not reduced, you are getting something, then this provision is not applicable. Then suspension will not happen. Then you are not required to inform immediately. Of course, you are required to inform, but once you get the order.
No, in the order itself, if it is mentioned that these some waivers were asked like this, say extinguishing or cancellation of share capital, and they don't mention the same in the order, but they say that you approach respective authorities for getting these waivers.
No, it is not like that. It never happens.
Acha.
It never happens. No. If you have demanded, the resolution plan says these are the asks, right? Your resolution plan order will also speak about the operating para. Now, about extinguishment of capital, about payment to the existing shareholder, about reduction of capital. Now,
Yes.
It is not possible that they will remain silent. It is hypothetical to believe that that will not be
No, it is
part.
there in the plan, but not in the order specifically. That they don't, order does not say that from this date it will be this. But it is in the plan and it is up, suppose it will be approved, then.
If it is extinguishment, believe me, ma'am, I have not seen any single order,
Hmm.
which, if it is a listed entity I'm talking about,
Huh.
the unlisted entity may be a different case. If it is a listed entity, if it is an extinguishment case where your entire capital is getting reduced to zero, no choice the exchange, the adjudicating authority will definitely make. It may be a different matter. They may or may not make a pronouncement during the open court.
Hmm.
If the pronouncement is not there, it is delayed until the getting of the order.
Okay.
So these are the routine compliance. So after if your entity is listed, right? I'm not going into one by one. Somebody who is dealing into the listed space is aware that on quarterly basis, you are required to do n number of compliances. Like you have to submit your shareholding pattern, corporate governance report, financial result, reconciliation, investor grievance, deviation, related party transactions, right? Annual report, payment of fees, annual secretarial compliance report, financial result, annual report, share transfer agent, and so on and so forth. Immediately thereafter, the cycle of compliance also starts. So you have to figure out how you will implement. If you are a implementing agency for a listed entity which continues listed after implementation of a resolution plan, after approval of a resolution plan, then you have to be very, very meticulous in drafting your plan and also planning a strategy for its implementation. Otherwise, you will end up doing default for preparation of financial result. You may say, "Arey, abhi to resolution plan mera approve hua hai. Where do I have a time to prepare my financial result?" Right? Nothing doing. We have no option but to do all these compliances. Let us see some specific provisions which are applicable. Many of these are applicable during CIRP. We'll skip like regulation 17, which is with regard to the corporate governance norm, that you are waived off from compliance of audit committee, nomination remuneration committee, but that is only until you are in CIRP. The moment you are out from CIRP, all these compliances will become applicable on you if you remain listed. So you have to figure out how you will do the compliance. Regulation 23. Though one specific exemption has been provided where it says that what 23(4) says that wherever your transaction is material, that is more than 10% of the consolidated turnover, you require the shareholder approval. Now, if you approve a resolution plan and as a part of implementation of resolution plan, you are doing some related party transaction which is disclosed in the resolution plan also, the 23(4) approval does not apply. So you are having a relaxation, but it has to be part of your resolution plan. That is important. If you miss out, then you are gone. Material subsidiaries also, there are certain exemptions, but again, if you make a mention in your resolution plan, otherwise you are not. Reclassification of promoter. For reclassification, Mr. X and Y have been shown as a promoter. Now, Mr. X and Y have gone and Mr. A and B have become a promoter who are nominee of successful resolution applicant, or maybe a successful resolution applicant itself may be a promoter now. So if this reclassification happens, you don't require a separate permission. Otherwise, the separate process of the exchange is required. That is an exemption. So as the implementation, you don't have a challenge. Normally, if you do the scheme of restructuring, arrangement, you require a prior permission of the exchange. But if you are doing through resolution plan, you are not required to take any specific separate approval. In Schedule 3, as we have discussed, when you are required to make a disclosure, what you are required to make a disclosure? List of creditor, appointment, reappointment, replacement of resolution professional, public announcement, admission, all these things are trigger which are required to be disclosed to the exchange. On approval, these are the informations which are required to be disclosed pre and post net worth. I am aware that resolution plan is confidential and many of the entities are not disclosing it anywhere. But the law has mandated the person who is investor, he has all right to know the KPIs. So you have to disclose pre and post net worth, assets post CIRP, details of securities continuing to be imposed as company's assets, other material liabilities which are imposed on the company, pre and post shareholding pattern, details of funds infused, additional liability, impact on investor, what is revised PE, return on net worth, past experience, business strategy. Not only that, when your resolution plan is going to be considered, at least 2 working days before, you have to inform what is your next date of resolution plan hearing. Disclosure of approval of resolution plan within 30 minutes. Right of cancellation, I have already informed, even within 30 minutes of oral pronouncement. Similarly, for implementation, ICDR provisions are also very important. If I am a listed entity and I'm infusing a capital, I am governed by the SEBI ICDR law. If I go to comply SEBI ICDR, seek in principle approval, then my entire resolution plan will go for toss. So if my resolution plan says that I have to increase the capital this way, whatever you have captured in your resolution plan, you will be able to do without complying the provisions of SEBI ICDR. You are not required to do, there are certain waivers in respect of allotment, in respect of issuance, in respect of lock-in, in respect of transferability, in respect of pricing. In respect of payment of consideration. Similarly, under SEBI SAST regulation, if I acquire anything more than 5% in a year, law is I have to make a public announcement. However, if I acquire more than 5%, if you are a successful resolution applicant, if you acquire 100% or if you acquire 75%, even then the disclosure will not trigger. Similarly, there are certain exemptions for acquisition which are approved under Insolvency and Bankruptcy Code. Delisting regulation also gives you certain exemptions, and these exemptions provide that if a delisting is made pursuant to resolution plan approval, normally there is a bar if you are compulsorily delisted, you cannot access the capital market and list again within next 10 years. Whereas here you can go back and list again. The restriction will not apply.
But then why one should, if it is to be listed again, why they will provide for delisting?
No, it may be providing for delisting because for the reason that today the extinguishment is necessary to make a company revive. You
Okay.
want 100% capital to be extinguished.
Hmm.
So you are compulsorily delisted. Or if your public shareholding reduces below 5%, then also you are delisted. It depends on the scheme. Now you have become a revived company. Now you are a successful resolution applicant. 3 years down the line, you are thinking that we can raise the capital again now, right? You have become a large company now after revival, and you want to list again. So the law says that there is no barrier that will come in between you. You can list again without any embargo. Similarly, for the
But this is a costly affair, no? This is too much of cost is.
Vaishali, it's not me and you who has to take a call. I agree. Somebody who is taking a call while making a resolution plan, he must have taken it consciously. His
Yes.
idea is that today my objective is to revive, right? I have to achieve my first milestone. Once I reach there, then I will see whether I have to remain listed or unlisted, right?
Yes, yes.
So they may achieve first target, and tomorrow you don't know, 5 years down the line they are now one of the top-notch company. They are making 100 crore profit every year, and they are now thinking that they may go listed. So the law says you have no bar, you can come. That's the relaxation provided. It does not say you come again and list.
Okay. Thank you.
Continuous listing requirement says that minimum 25% has to be with public. Now, if you reduce below 10%, you have to increase to 10% within minimum next 12 months of time. And if you reduce below 5%, minimum 5% will be required to be maintained, and minimum 5% has to be achieved from 5% to 10% has to be achieved within period of 1 year. I think meeting of the board we have already discussed. I think most of the part we have. Companies Act also. These are some suggestions. Prior intimation of 2 days is many a times a challenge. 30 minutes, the same point what I think Vaishali was asking, how practical it is to inform to the exchange within 30 minutes after the pronouncement. It's a very big challenge. So we have made the representation, but still SEBI and IBBI have not considered. Then there are some more relaxation on regulation
You
23.
mentioned that.
Yeah.
You mentioned about the guidance note of SEBI. Where it is available on SEBI portal. What is
It is
the
available.
that?
It is available. It is available on website of portal.
This is in specifically in respect of CIRP companies, is it?
Yes.
Okay.
So that's it. I think we are done with by and large the discussion that I intended to make on the resolution plan implementation. I would be happy to take any questions that participants may have in this regard. You can unmute and we can do the interaction. No questions at all? Anjali, you are there?
I want actually the SEBI guidance note.
Especially, I'll provide you. You can just send me the your email ID in chat box. I'll share you.
Yes, I will give. Yes, thank you.
Yes, sir. Can we conclude now?
Anjali, I was just asking, is there any question from any participant? He can unmute.
Anybody, if you have questions, kindly ask Amit, sir.
What will happen if the any non-compliance after the approval of the resolution plan is done by the RP in case of listed company?
Consequence could be running from many perspectives. It can be a contempt of court. There is a provision which is there in the insolvency and bankruptcy code itself, which also provides for the consequence of failure to comply with the order.
Okay.
So section 74, if I am not wrong, then the consequences can be in terms of that. Otherwise, Contempt of Court Act is one, and 74. And of course, you will be made ineligible from participating in further resolution processes. And of course, the company's corporate debtor will go into the liquidation if the resolution plan is not getting implemented.
Okay. Okay. Yeah. Thank you.
So Anjali, if there is no more questions, can we close?
Yes, sir. We can close now. There are no questions.
All right. Thank you to all the participants, and thanks to ICSI, IIP for giving this wonderful opportunity to interact with all the insolvency professionals. Very interesting subject that is implementation of a resolution plan. I'll be sharing this presentation to the institute, and institute will in turn share these copies to all of you, and maybe we can connect some other time, some other forum, and we can continue this dialogue on implementation. It's very interesting and gives you a lot of excitement whenever we discuss about nuances, because it's a more about the planning. Implementation is easy, but implementation become complex when you don't plan while drafting a resolution plan. Resolution plan implementation is like you have already a checklist which is prepared in the resolution plan, and now you have to just do to-do list and you have to implement. But ticklish part is invariably in all resolution plan, you will miss out on something, how to navigate those things. I think that is the real challenge, and that is the real excitement as well for the professionals how to come from that cycle and do the implementation.
Sir, I have a last question. I remember now, if you allow me.
Please, please.
It's
Waiting.
again a hypothetical situation. For example, resolution plan has to talk about section 30, subsection 2B compliance. That's the most important thing. Wherein it talks about operational creditors, the payments and all. So imagine if a resolution plan, for example, if there is no payment to be made to any operational creditor in case of the CD, because the liquidation value is such that after settling the
Understood.
workers, employees, and secured financial creditor, there won't be anything left for the payment of operational creditors. In such a scenario, SRA doesn't know about it. He doesn't know the liquidation value. So what if he doesn't provide anything for the operational creditors?
No, it is not possible. The plan has to be in compliance. So saying that he does not know about anything about the compliance of this particular provision, because he has to ensure, and whatever information he has to seek, and the resolution professional is also duty bound to ensure and check the resolution plan is in adherence to these particular provision. So I believe this is just a hypothetical situation which you are thinking. It practically is not possible. Now he has to know, and he will be knowing, and if there is nothing, no operational creditor exists, or there is no liability required to be provided for in terms of that provision, then all right, you go ahead. Then nothing is stopping you from moving forward. But if something has been required to be provided and you have not provided, I think that's a plan which is not drawn as per the IB code. Now that may be challenged, because that is not a plan which is drawn as per the provision of the IB code. Somebody can go and challenge that particular provision.
No, in reality, there is nothing to be paid because there is no
Then
liquidation
you don't have to worry. Then you
Then
don't-
even if the SRA doesn't talk about operational creditors payment, it is fine.
it's fine.
We can say, RP can say it is in compliance.
Absolutely. Absolutely.
Yes, sir. Thank you.
All right. Thank you. Thanks to all, and thanks to Institute once again for giving this platform for interaction. It was
Thank you very much, sir, for taking out time and sharing your thoughts and experiences on the topic. Thank you very much, sir, for giving your valuable time to us. Sir, you are requested to please share the PPT.
I will share.
Sir, please share your contact details.
Okay.
Or should I take from the institute?
No, I'll just write down in the chat box.
Thank you.
Thank you, sir.
All right. Thank you.
Thank you, sir.
Thank you, sir. Thank you.